Hey everybody, it's Will VIP Mortgage, and it's time for Local Lender Update. Buckle up, this one's going to go in detail. So what's going on? This week is the Fed meeting that we've all been waiting for. I've been pointing to this particular meeting since the springtime because I thought it was the most likely time the Fed was going to cut, and that's how things look like they're playing out. Of course, we don't know for sure until they make their announcement, but what is going on? I've had several conversations over the last week or two where people hear the headlines, but they don't know what it means. When the Fed cuts rates, they are not cutting mortgage rates. What they're cutting is the funding rate that banks charge each other when they borrow money. And so that does affect finance in the larger economy, because if money is cheaper, even a little bit between banks, then that should make lending rates on mortgages and car loans and credit cards go down a little bit. That being said, the Fed funding rate is already baked into the market improvements we've been seeing. Now, we saw some improvements when the confidence level of this cut went up, and we've seen even more in the last couple of weeks. Part of the reason for that is because we're talking about either a 25 basis point or a 50 basis point cut. Now, a basis point is 1% of 1%. So we're talking about a really small fraction in the cost of borrowing money that the Fed is talking about cutting. A 50 basis point cut, to be sure, is larger than most cuts. So that would be an impact. And the market's trying to figure out, because it always works on expectations, are we going to expect a smaller cut or a slightly bigger cut? And then they're also trying to project what's going to happen in the rest of the year. Is the Fed going to continue to cut? So the Fed's certainly going to have a cutting strategy, and they're basing that strategy on what they think the economy is going to do. So last year, when they cut the Fed funding rate, but mortgage rates went up, the reason that happened is because we had stronger than expected job numbers, and that gave worries about higher inflation. And so the market data contradicted the policy of the Fed, and the market got nervous about that. This happens all the time. In the stock market, if a company's expected to announce $1 billion on their profit call and they only made 800 million, then their stock price goes down, because they missed expectations. So the watch word through the end of 2025 is expectations. And how close are we to expectations? And is the economic data reflecting the strategy that the Fed is going to announce? Generally, when they change their money policy, they do so with a plan in mind, and they do so with a big rationale. And we're probably going to be watching for a lot of comments to see what they're going to do next. So keep it tuned here. We'll keep you informed. Don't expect mortgage rates to fall by 0.5% or a full percent. That's another thing I've been hearing in conversations, both with realtors and with clients. People are telling them we're going to see 5% interest rates or 4% interest rates in the next few months, and that's just highly unlikely. In fact, if mortgage rates change that quickly in a short period of time, that's a bad sign for the economy. We'll keep you informed and explain everything that's going on.